Starlink Nigeria's dominance in the country's internet market is fracturing, not because of poor performance, but because of pricing and capacity pressures that are reshaping its user base. What was once a rapid ascent has stalled, with subscriber losses and service restrictions revealing deeper structural challenges. The real story isn't just about high speeds or satellite coverage. It's about whether Starlink can scale sustainably in a price-sensitive, high-demand market like Nigeria. Data from the Nigerian Communications Commission shows that by mid-2025, Starlink had reached 66,523 subscribers, placing it second only to Spectranet among Nigerian internet service providers. That growth was fueled by reliable, high-speed connectivity, especially valuable in areas with inconsistent traditional infrastructure. But that momentum reversed sharply in early 2025. A 50% telecoms tariff hike triggered a chain reaction, forcing Starlink to raise its residential monthly fee from N38000 to N57000. The company cited exchange rate fluctuations as a key driver, a pattern seen in previous adjustments throughout 2024. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The price increase had immediate consequences. Across major ISPs, including Spectranet, FiberOne, and Starlink, nearly 18,000 customers were lost in the first half of 2025. For Starlink Nigeria, the impact was particularly severe. Its subscriber count dropped by 14% in the first quarter alone, marking the steepest decline since its 2023 launch. This wasn't just a temporary dip. It signaled a shift in affordability and market positioning. At the same time, capacity constraints have crippled expansion. In Nigeria's largest cities, Lagos, Abuja, and Port Harcourt, Starlink suspended new residential orders after hitting full network capacity. A sold-out notice appeared on its website, and new users were placed on a waitlist. This wasn't the first time. In November 2024, the company had already paused sales and activations due to bandwidth shortages and unresolved disputes with the NCC over tariff adjustments. Though it resumed nationwide operations in July 2025, the September relapse into restrictions confirmed a persistent bottleneck. The important part is not just the shortage, but what Starlink did next. Unable to meet residential demand, the company pivoted to a premium business plan with a monthly fee of N150,000 and hardware costs up to N24 million. Surprisingly, demand for this high-tier service surged. The business pre-order page drew significant interest, suggesting untapped demand among corporate and enterprise users. But here's the catch. While businesses can absorb the cost, they don't represent enough volume to offset the broader residential shortfall. Starlink Nigeria's core growth engine was always the mass market, and that remains constrained. Customer service has also been a persistent pain point. Users frequently complain about slow response times and the lack of physical support locations. To address this, Starlink launched in-person support centers through Konga stores nationwide in April 2026. This hybrid model, combining online access with physical retail, marks a strategic shift. It's not just about fixing modems. It's about building trust and accessibility in a market where digital-only support has been a barrier. But even as Starlink adjusts its model, a major new competitor is preparing to enter the field. Amazon, through its Project Kuiper, now branded Amazon Leo, has secured a 7-year license from the NCC and is set to launch in Nigeria by 2026. With a planned 3,236 satellite constellation, Amazon aims to deliver 400 Mbps speeds using smaller, more affordable terminals. Its target is broad: households, businesses, and government agencies. A public waitlist is already active, signaling strong pre-launch interest. This changes everything. Amazon's entry directly threatens Starlink's position in Lagos, Abuja, and Port Harcourt, regions with the highest concentration of internet users. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The competition won't just be about speed or coverage. It will be about affordability, customer experience, and network resilience. Looking ahead, Starlink Nigeria's ISP and sales and installation major license is up for renewal in Q1 2027. That deadline could force a strategic decision: double down on enterprise services or invest in capacity expansion to reclaim residential market share. The unresolved question is whether the company can scale infrastructure fast enough to meet demand before Amazon Leo captures critical mass. The takeaway is clear. Starlink's early lead is eroding not because of technology, but because of economic and operational constraints. Pricing alienated mainstream users, capacity limits blocked growth, and now, competition looms. The next signal to watch is whether Starlink announces a network expansion or infrastructure upgrade. Because without it, its dominance may not survive Amazon's arrival.